Welcome to my $100,000 stock experiment, year 2, week 52, ending April 10th, 2020. This isn't an endorsement to purchase any stocks that I bought, nor an endorsement to purchase stocks in general. I'm on a mission to become a great growth stock investor. Watch me on my journey, learn from my mistakes, and celebrate my successes. The S&P 500 was up an amazing 12.1% for the week. I heard on the news that's the highest percentage gain since the 1970s. I don't know if that's true. I didn't look it up, but that's what they say. The daily swings are still 2 to 4%, which is a little high for me. And Thursday, the last trading day this week, on 4/9, it was at 2%, which is the lowest it's been since February 24th. It may be hitting resistance at 28.17, where I have that blue line. This index is still well below its 50-day and 200-day simple moving average. Every once in a while, as the index is going up or down, I add these lines, which I think are going to show lines of support and or resistance. That blue line that I mentioned has been there for over a year. I looked back at my series and saw that I had this line on a chart from February 22nd, 2019. The top line, the green one, I added on February 14th, so 2 months ago. I can't believe we were at 33.45, and today we're at 27.89. The orange one at the very bottom I added last week on 4/3, and the one above it, the pink one, I added the week before, 3/27. When I talk about support and resistance, I'm talking about a line and then whether the index can either get above it or below it. So at number 1, 2, and 3, the S&P came down to that line and then popped right back up above it. It may have crossed slightly below it, but it didn't go below it and stay below it. And then 4 and 5 in the red, those are showing resistance where this index goes up to that line and can't get over it. It's like it's bumping into a ceiling. At number 6, we're right at that line that has been support and resistance in the past, and we'll see in the next few weeks whether this line serves as support or resistance. The VIX, or the volatility index, also came down a little bit. This one is supposed to be more a future-looking index. It's based on the expected price fluctuation in the S&P 500 over the next 30 days. So it's not basically on what has already happened. It's what's going to happen in the future. All the other charts that I'm looking at are as what's happened in the past. I bought 2 stocks this week, Microsoft and AMD. These are both stocks that I've held in the past and they had done well, so I gave them another try. This is a 6-month chart for Microsoft. It's consolidating right at the 50-day line. I'd held this most recently in my husband's 401k, where I had 3 buys that I made between November 2019 and January 2020. And on those 3 buys, I had a gain of $4,200. On the IBD that you can find at investors.com, this stock has a relative strength of 95. And if you look at MarketSmith, which is a premium service through investors.com, it has a blue dot, which means that it's a recent high for that relative strength. The composite rating is also high at 98. And there's consistent increasing sales and earnings for this stock, but they're not earth-shattering like some of the new growth stocks. This stock is mature. I'm sure everyone's heard of Microsoft. So it still has been moving up in the past, and I'm hoping that it gets another gain. For this purchase, I made it on 4/7, so I've held it for 4 days, and I'm down 1%. I've lost $98 on this stock. AMD is my other purchase this week, and I've also held this one in the past. From November 2019 to January 2020, I made $5,500 across my 3 buys, and February 2020, I had bought and lost 3 buys, and I lost $1,300 there. So I still have, $4,200 gain in this when I've held it before. I like that the price was tightening up The bars were getting shorter, and it does appear to be holding above its 50-day simple moving average. This stock has a relative strength of 97 and a composite rating of 99. I've held it 4 days, just like Microsoft, and it's down 1.2%. I lost $122 on this. Alibaba, this is my only winner. Right now it's holding at its 31-day exponential moving average, that blue line, but it's still below its 50-day. I've held this one for 6 days, and it's up 4.6% with a gain of $458. Here's the benchmark ending my 2-year experiment. $100,000 in the 2 years has grown up to $144,697 for the Melissa Method experiment. And the S&P 500 for the same time frame is $105,027. My current holding bar chart shows the 3 stocks that I own. My first purchase is as close to $10,000 without going over as I can get for each of the stocks, and that's represented by that dashed black line. The yellow line, 9,200, that's my 8% loss. Every time I purchase a stock, within minutes of buying the stock, I put my sell order in at a floor, 8%. So if that stock goes down to that 8% mark, it will automatically trigger a sell. So each bar represents 1 week. Alibaba I've held for 2 weeks, and you can see it's above that dashed black line with a value of 10,447. So I have a gain in that. And Microsoft and AMD, I have a slight loss in both of those. As you can see, it's below that dashed black line. I also look at my current dollar gain and my percentage change per week, and I sort those with the losers on the top and the winners on the bottom. So you can see on the top one, the current dollar value gain, AMD is my biggest loser, followed by Microsoft, and then Alibaba I have in the green. I have a gain of $458 in that. And the percentage change also, I sort with the losers on the top. I want to get rid of my losers and focus on my winners, but right now 1%, that's okay. Haven't hit a floor on it, and I'm going to give these stocks a little time to run. I've just completed my 2 years of doing this experiment, and down in the bottom line, you can see for the year in the green on the very far right-hand side, I'm up 18.6% versus the S&P 500 over on the left at negative 4%. And my lifetime, so my 2 years that I've been doing this total, starting April 13, 2018, in the green, I'm up 44.6% versus the S&P up 5% for the same time frame. So my 2-year experiment has come to a close. I'm going to continue investing, and I'm going to share my progress in the future, but I'm not going to continue my weekly series at this point. I do have a nice cash balance of $1,114 where I can be making some purchases. So I'm going to keep reviewing stock charts, looking for stocks that are setting up. I want them to have some price advance with volume. And I want to be buying stocks that are in the top sectors and then stocks ranked high within that sector. If the market goes into correction again, I'll be getting out. I'm also going to spend time continuing my education, reading investment books, and doing webinars and tutorial on the IBD at investors.com. Even if you're not a member, there's a lot of free learning materials up there. So I encourage you to read that stuff. And on Fidelity, they have great webinars and tutorials also. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.